Good evening, Ken Long from Tortoise Capital, coming to you again from Berlin, August 26, 2009. Quick look at the market health check. Uh, Market remains in bull quiet. 80x is above 35 and rising, but plus DI got a little bit weaker today, and minus DI got stronger as for the third day in a row, we're really not able to break out above 104. I've identified and extended the short-term support levels at 102, 100, and 98. Also respecting the 50-day moving average at 96, the 200-day moving average at 88. The market remains in overbought conditions on William percent R, so it's time to ensure you capture your profits when you see weakness. Although we've seen in the past, yes, the market can remain overbought for a long time in a bull. It's easier for it to do that early in that move. Now we've seen a couple pieces of weakness in here, and more folks are being sensitive to pullbacks at this point than overly excited about breakouts. So that's the market health check. I want to take a quick look at the daily market summary. So again, bull quiet. We're at 82 on the 10-day index, so we are just barely overbought. The gap stat is now 60% of the time gap and reverse, meaning that it will 60% of the time in the last 30 days it is closed higher than the opening price, or if it gapped up, it closed lower. So it's a gap and reverse. We'll see that as an important move today. I want you to pay attention on the pivot points. We're going to see how those are applied in intraday trading in the Alcoa Ready Fire Aim case study in the second video for tonight. No signals in the overreaction system, no signals in the channeling system. We remain very positive, bullish from the 200-day moving average stretch. The 50-day moving average is slope. Only the 10-day average or the 10-day index is overbought. That's of concern. Everything else is full speed ahead, with the exception of the 30-day regression line slope, which continues to drop back towards average. Volatility is quiet. ADX above 35 is a high level for SPY, so caution. Bull move getting a little long in the tooth. We can see the first sign of weakness here in the difference between plus DI and minus DI. That little hook up in plus and minus DI, and the hook and the rollover in minus DI causes it to pull back a little bit. See that second leg of that bull move getting a little long in the tooth. We're going to take a close look at Alcoa. From the large caps, it's a triple screen. It's also the only Dow component that is oversold on a Williams percent R basis, and so that makes it stand out for purposes of weakness, which we'll see on the Dow tactical report. So Alcoa is it's a triple screen, and it's a 10-day max pain and a 3-day max pain. It's at that over sold conditions on 10-day index. It's the only Dow component to be that weak, so it's really standing out as an anomaly. If you take a look at the relative strength of Alcoa versus the Dow Jones 30, it's had 5 days in a row of declining relative strength with respect to the index. And today's relative strength candle on it was actually a doji at a 10-day low. And so that's, if there was ever a prime time for it to reverse in a powerful move, tomorrow would be it. We can see that the commodities are all in, of all the ETFs, they are at 10-day max pain conditions. So commodities as a sector and then as an asset class have been weak compared to equities. So again, things are cyclic in nature. They get worse until they can't get worse anymore. When they snap back, it could be interesting, and so that's an interesting position to be in. You can see that S&P 500 industrials were weak today. So again, if when they snap back, while all the other sector spiders have profits protected, there's really room in basic materials and industries to go. So that bears a watching. If that sector goes, then you can be sure that Alcoa will go, and so that's why we care about Alcoa. Let's see if we can find Alcoa. Here was today's move in Alcoa. It pulls back at this and closes about $12.27. $12 even is a very interesting price level in Alcoa on support on a longer term basis. If we have a chart on that, that would be awesome. Yeah, you can see on the daily, this was from yesterday, but the prices are still useful. So I'm drawing that line right in a trading range of about from 12 to 14. So $2 on 14 is about 15%. This trading range that goes from 12 to 14 for about the last 3 weeks is there's a 15% swing inside here, and you can see that Alcoa has support at 12. That's very, very interesting. So just in terms, if we just said a 13 is probably fair value at that blue line right there, you can see we're on the right side of value if Alcoa is able to stay in that trading range. So any kind of strength in Alcoa tomorrow, and I'll be on it like a fat kid on cake. So that's a quick look at the Mark Health Check and just some quick thoughts on Alcoa. We're going to see how that trade unfolded today with respect to SPY. So thanks for your attention.